The big focus this year has to be on implementation.
The one thing markets don't like is uncertainty, and that's what we've got right now.
What's your take on that? Do you think that's what's been happening?
Right, so we'll ask a nice blunt question, shall we? Appreciate that, Fiona. Thank you.
A legal threat comes in and perhaps the media company backs down more so than it used to.
Welcome to the Weekly Wrap, where we go over NBR's top video stories from the past week. First up, Dollars and Cents is back. This week, our panel gazes into their crystal balls to discuss the New Zealand economy and what a focus on foreign investment could mean for New Zealand Inc. Hello and welcome to Dollars and Cents. I'm Jonathan Mitchell. New Zealand fell into a deep recession last year, putting a dampener on festive cheer at the end of 2024 as businesses and households struggle with the high cost of living. Going for Growth is the government's platform for economic growth, including tourism and attracting foreign investment. But how is business doing in the here and now? To debate, businessman and Christchurch councillor James Goff, Retail New Zealand Chief Executive Carolyn Young, and Business New Zealand Chief Executive Catherine Rich. First to you, Catherine, what's the mood of businesses this part of summer?
Well, I think businesses a bit more upbeat looking into 2025, but of course has a very realistic perspective in that every single economic statistic you care to look at is not looking good. It doesn't matter what you measure, and many of your readers of NBR are well across all those different statistics. So the mood of business right now, and it was great that the government started off with more of an aspirational speech and its vision, because business was saying, you've spent the first year undoing stuff, you've put a few more ideas on the table, but this is the year where they want to see some ideas about how you're going to kick the economy into gear, because many businesses aren't doing well at all. All of the information that Business New Zealand collects, whether it's our PMI survey or the PSI, you've still got 2 years of recession for manufacturers and about 10 months for services. So it's a bit dour, but many of us, certainly those of a certain age, have been through these economic cycles before. So we know we're going to survive. It's just a question of what's new from the government and what more we can do from business to lean in.
And what gauge have you got from the government at this stage? Are you optimistic about what they're saying?
Well, the speech had those usual aspirational taglines, but they did come in tandem with some really good ideas. And in particular, I was pleased to see the move of economic development to economic growth, for Nicola Willis to take that on. One of the first things she has done is to call in associations like Business New Zealand to run a sort of mini Shark Tank and present what ideas we all have that might contribute to economic growth in a hopefully costless manner. We know they haven't got much economic headroom, but there are a lot of things that can be done to kickstart economic growth just by making some changes and continuing many of the changes they've got in the pipeline.
Carolyn, what about summer trading for the retail sector?
Look, it's been pretty mixed, it would be fair to say. We know that Christmas came late for retailers, so normally you'd be pretty busy in the couple of weeks in the lead up to Christmas. A lot of retailers we spoke to said it was sort of 4 or 5 days before Christmas was really when we started getting that frantic busyness. It did flow through to Boxing Day, which was great. A lot of businesses had really booming Boxing Day sales. Obviously, that's at a margin. You know, you're selling stock at a lower price. So that's going to impact profitability and the margin going forward. And then the start of January was good, but it's been quiet since the sort of second week of January. So there is concern out there for retail around, you know, where consumers are at, how much longer they need to survive. Alongside what Catherine just said, absolutely great to get positive news out of the government. It's great that they're thinking about how, you know, we'll be able to grow the economy, being a yes rather than a no. All of those sort of positive words are really great. We really want to see how do we engage in with that and find some really good solutions that will help everyone across the motto, really.
Are you involved in the so-called Shark Tank, Dragon's Den type initiative?
I haven't been invited yet, but we've got a request in with Minister Willis to discuss economic growth further, so we'll see.
Should this have happened, say, 6 months ago when, you know, the recession was deep?
Yeah, absolutely. It feels like it's a long time coming, and I think to Catherine's point, there have been a lot of things that have stopped or or slowed down or paused, and this is the start of actually hearing what are they actually going to do, and when will those things roll out, and when will it start taking effect. I think the stuff around tourism and the digital nomads and stuff, that's just tinkering around the edges. That's not going to have a big impact. So really thinking about how, as Catherine said, we can lean in to some new initiatives and be thinking about growth and encouraging people in New Zealand to buy and spend in New Zealand is going to be really important.
What do you want to see, Catherine?
Well, we've got a long list. We're up to Shark Tank idea number 17, but we'd like to see an environment where there is greater foreign investment. And, I invite NBR readers and listeners to go online to pretend to be a foreign investor and look at the information and look at the websites and how we present ourselves. It's not pretty. In fact, the Overseas Investment Act website would possibly be the dreariest website in the entire public service in terms of presenting our nation. So foreign investment, changes to immigration, which Erica Stanford's well on the way. We'd like them to go further. We'd like the continued focus on trade. I've just written a piece where I don't think that cuts to MFAT are a good idea at a time when we're trying to increase our friendships offshore. Ultimately, though, if you're looking at a place where it's easier to do business, you still have to get back into cutting back regulation, but you also have to get back to those bigger discussions of tax, immigration, and all those other chunkier economic issues.
Let's bring you in, James. Can you give a sort of South Island perspective, Christchurch perspective on current business conditions?
Yeah, look, Christmas and summer trading were weaker than expected. I know certainly from the Terraces viewpoint, which is a key preeminent hospitality precinct in Christchurch, they had a really tough winter, and I think everyone was looking forward to. I guess there was a spring in the step with a change of government, new impetus, and a focus on the economy. But as we all know, although interest rates are heading in the right direction, there's a real tail with that, and the discretionary spend, with hospitality is something that's always felt. So a really bad winter. Most people in New Zealand experienced a pretty bad Christmas and New Year period in terms of the weather, but in the hospitality sector as well, that's reflected too. So the revenue was down, and I think it has been actually pretty tough, and it's been quite a tough summer in terms of the hospitality side of things. But then, anyone that's kept up with the news will see that Christchurch is a bit of a media darling in some ways, and I think that's quite well deserved because the city's looking great. The vacancy rates in terms of commercial property are considerably lower than they are in Auckland and obviously Wellington, which is encouraging. The city's looking great, and there's a number of key anchor projects which are keen to going to be opening soon, and everyone's really keen for them to open, which is Parakiori, which is the Metro Sports facility, long awaited. It's taken a very long time. But that's set to open in early 2026, so should be completed this year. And then, of course, Te Kaha Stadium, One New Zealand Stadium, as it's known, that's on track, it's on budget, it's the talk of the town, it's looking incredible, you can't miss it. Anyone that's been in Christchurch, you can see the roof going on at the moment, and that's set to open early 2026, April.
And that full video is available now to watch on mbr.co.nz. As the leader of the free world, Donald Trump begins his tit-for-tat trade war with the world. Our correspondent in Sydney, Lachlan Cahoon, takes a look at the implications for Australia.
Global markets have been hit by the prospect of a new trade war following Donald Trump's move to slap tariffs on his neighbours, Canada and Mexico, and also on China. The repercussions have been felt all over the world, not least of all in Australia. Even though Australia hasn't been hit with tariffs, the immediate impact has been significant, and an ongoing trade war would pose some longer-term economic dilemmas across the Tasman. NBR's Sydney correspondent Lachlan Cahoon has been looking at this in his Underarm column this week and joins me now. Hi, Lachlan.
Hi, Will.
So what's the immediate response in Australia to the trade war?
Well, on Monday, the immediate response was on the markets. It hit the ASX and the Aussie dollar straight away. The S&P 200 fell 1.8% immediately on that. So that wiped about $50 billion off the share market. That was the worst day we've had since September last year. So the Aussie dollar then went down to 5-year lows under 62 cents, and it's just above 61. So on the market, as you would expect, exporters were hit, miners and also tech companies. And this was all despite the fact that Australia wasn't really the target. I mean, Rio Tinto and BHP, big companies in Australia, ASX listed, they export potash and aluminium from Canada into the US. So they were going to be very severely hit by any tariffs on Canada. And of course, being listed on the ASX, it was going to affect the price of their stock price here in Australia.
So how would an escalating trade war with China impact Australia?
Well, one of the bellwethers for that would be Fortescue, which is one of our big iron ore miners. They don't really do very much else apart from iron ore. So the shares are down 35% in that company over the last year as the Chinese economy has slowed and iron ore prices have fallen. And I think Fortescue shares were down about 4% on Monday. So Australia's got a lot invested in a buoyant Chinese economy. So if the tariffs hit China hard, we're also going to be hit. So I mean, for example, we had a $1 billion a year wine trade with China up until 2021. That's when they slapped tariffs on us amid the diplomatic tensions. But those tariffs have come up and the trade is back to almost where it was. But you can't really imagine many Chinese buying premium Australian wines if their economy goes down the gurgler. So that's you imagine that the Aussie wine would be off the shopping list. So we're very vulnerable. China's Australia's biggest trading partner. Exports are 8% of our GDP. Will be collateral damage. And then there are other industries as well. I mean, there are 130,000 Chinese students in Australia. They're the big part of a tertiary export sector that's worth about $50 billion a year to the Australian economy. If we don't get any Chinese students, then that's going to hit the domestic economy severely as well.
And the Reserve Bank of Australia's tipped to cut interest rates soon. How's this changed environment going to impact on that?
Well, we had some benign inflation data last week. The CPI is at 2.4%. So that raised hopes of an interest rate cut, and the whole economy is screaming for an interest rate cut. Speculation after that was that the RBA would cut in February and have a couple more cuts later this year. But with this obviously, the trade war would be inflationary, and some are saying that the RBA might not cut rates quite as much as expected if we were impacted by the trade war. I mean, Paul Bloxham, he's the head economist from HSBC. He's already come out with some predictions. There's only going to be 2 interest rate cuts this year. Previously, a lot of people were suggesting that we'd get 3 or 4. So that would hit growth. And it would also have a slightly negative impact on the property market, which has stalled. House prices are going backwards in Australia now. A lot of people are very happy about that because they've been ridiculously high, but it would also impact on the property market you would anticipate.
So what other winners and losers are there going to be out of this?
Well, you've got to remember that all Australians have their money invested in superannuation funds for their retirement, and superannuation funds own around 40% of the market capitalisation of the ASX. 2024 was a great year for superannuation returns as the market hit record highs. So if the ASX is hit, not just the major stocks, but also the index tracking passive funds, you would think that this wouldn't be such a great year for superannuation funds. And so that's going to be hitting the retirement savings of just about every Australian. I mean, you know, the superannuation funds, I mean, it wasn't directly as a result of the tariffs, but Australian Super, which is the biggest fund, they invested $500 million in NVIDIA just a couple of days before the Chinese counterpart AI came out. So you can imagine what that's done to their shareholding in NVIDIA. So that's one way that's going to really affect just about everybody. Obviously, the mining industry will be affected. Imports will be more expensive. That'll be inflationary. The lower Aussie dollar is going to be good for some exporters and the tourism industry, but any of us thinking about travelling overseas this year are thinking pretty hard about where we're going to go now that the dollar's sort of on the skids. But of course, all this is a moot point. I mean, Trump has walked back the threats on tariffs a day after making them. So we don't know where this is going to go. But one thing markets don't like is uncertainty, and that's what we've got right now.
Well, thanks for trying to provide us with some certainty, Lachlan. We appreciate it, and have a good week.
Yeah, you too, man. Cheers.
Now to Toil and Trouble. This week, the EMA's head of legal, Mauro Bassi, gives us the legal take on why there's now more enthusiasm for employers to settle an employment dispute at mediation rather than taking the matter through the courts. Here's Fiona Rotherham.
Toil and Trouble this week is looking at cost increases in employment litigation. And we talk with Mauro Bassi, who's head of legal for the EMA. Welcome, Mauro.
Thank you. It's a pleasure to be here.
So let's talk a little bit about these cost increases. What have you noticed?
I think two things I'd say at the outset. Inflation is kind of hitting the world at the moment in all sorts and spaces. I think, in the court system, we're not able to avoid those influences. So we're seeing, I think, judges, we're seeing authority members make choices to say what used to be a reasonable number, a reasonable deterrent may not be anymore. And I think the second thing that we're seeing is that the people who are coming to courts, be they employees or employers, they're spending more money on the actual costs out of their pocket. And so what they need to receive to kind of make it a net positive experience has to go up as well. So there's a lot of pressure in this space, and not all of it, or not any of it, frankly, going downwards.
Can you give us an idea of the sort of numbers or the bands, as you call them?
Yeah, so there's lots of different ways you play costs in the Employment Authority or in the Employment Court. One of the interesting ones is that our compensation claim, so for hurt and humiliation, you have kind of developed in the courts process a series of informal bands, or rules of thumb, perhaps is a better way of putting it. To borrow from McDonald's, it's like a small, a medium, and a large. So small tends to be somewhere between $0 and $12,000, $15,000 kind of thing. Medium tends to now be that sort of 12 to 15 up to about 50, and large is sort of 50 and above. And so what that means, bearing in mind those numbers have, crept up a little bit over the last little while, is that kind of a $15,000, $20,000 problem a year or two ago becomes a sort of $25,000, $30,000 problem nowadays. And kind of most of the people sitting behind the bench kind of start with I want it to feel like a middle of the middle band, and then they sort of make some decisions about, well, was it a bit less than that? Should we move it downwards? Is it a bit more than that? Should we move it upwards? What do these facts and circumstances feel like? And so I think, putting it kind of in summary form, not that I'm very good at that, as you can already tell, but in summary form, that movement, the movement of those bands in any format, stretches where everyone's expectations sit.
So what does that mean practically? You've got a lot of companies struggling in the current economic environment. So how does it impact how they behave in taking litigation or not taking it, as the case may be?
Yeah, the not taking it part's perhaps more of the answer to the question. So in principle, when an employer and an employee have a problem, there is this legislative framework to go about sorting it out. And kind of in the sense that all roads lead to Rome, all roads lead to mediation. And mediation, for all of us that practice, we kind of know this is sort of worth of that. It's going to take about this long, and we'll probably charge about this much. Firstly, some of these changes in bans and expectations change what we now negotiate within those mediation sections. So we now know this is actually worth a little bit more than it used to be. The second thing is that in terms of briefing our employer or our employee clients, we're giving them some of that feedback. We're explaining to them what our fees and some of our charges are, and kind of the difference between settling something at mediation, where under the law you can do that on a tax-free basis, as opposed to going to court. That step up, or that authority, that step up starting to be measured in tens of thousands of dollars, not 6 or 7. So first thing is, I think it provides more enthusiasm to do your deal in mediation. And secondly, it means, though, I think if you do decide to go to court, you're really doing it, if you know what I mean. You're not going to stop. You're not going to back away. It's going to cost you a lot of money. If you're an employer, it may cost you more to actually win. So net, you're at a negative space or a negative position. But if it's important to you at that point, you're doing it to prove yourself right, or to hold a line, or to set some form of internal precedent. There's a lot of non-monetary calculations that are in that space. But for people making decisions, I think the differential is starker, and I think the commitment to take a court step now is a more substantial and significant one that once you make, it's pretty hard to back away from.
So it's a higher cost for having principles around this?
It's a higher cost for legally enforcing them, perhaps, is a way of putting it, but yeah, definitely.
What about the, how much the actions of the employee contributes to what they get? There's been some changes. Can we talk through what?
So you're right, and there's some changes being mooted by the current government in terms of things that they want to do a bit differently. or might want us to do a bit differently, perhaps. What you're talking about there is a good old doctrine called contribution, which essentially says if I contribute to my own downfall, if I behave poorly as an employee in the workplace, for instance, but overall I'm probably less wrong than the other guy, so I'm entitled to some form of compensation, that can effectively be discounted to take into account that I don't have kind of what in law we might describe as clean hands. The discounts in the system haven't necessarily been large. You kind of see a 10% discount, a 15% discount, a 20% discount. What's being mooted by the current minister is a suggestion that, you know, if you've played a fairly significant role in not being the best you could possibly be, then that discount could be more significant on average and as is used. So you might start to see things like 50% discounts or 100% discounts potentially apply in this space. I think that's a good thing. The reason for that being that there aren't too many factors to dissuade an employee from bringing a claim based on an overall assessment of their case, right? So knowing that there is a bit more risk in there means that both sides have to make kind of a bit more of an intentional decision about what they choose to do.
So the minister, as I understand it, said she was worried employees under the current system are incentivised to try their luck raising a PG in the hope of a payout. What's your take on that? Do you think that's what's been happening?
Right, so we'll ask a nice blunt question, shall we? Appreciate that, Fiona, thank you. I think perhaps how I'd answer that question is this. There is a commercial decision point for an employer in this type of action, right? There is a number, and depending on your case, depending on your facts and circumstances, that number might be as low as $7 or $8 grand, it might be as high as 10 to 15, somewhere in that region, where if you do everything right and you prosecute your case to the maximum extent likely or possible, you'll still end up net paying out either that or a bit more than that. So I certainly can't blame and I certainly can't call into question an employer who says, well, look, if I pay this much money now, irrespective, on a no admission of fault or liability basis, I'm effectively buying my executive time back. I'm buying the end of this matter. I'm buying this being full and final and confidential, so it's not something that necessarily kind of has an ongoing impact on my business. As a commercial decision, I'm prepared to make that. And we see that happening. Yeah.
All right. Well, thanks very much for your time, Maro Basi.
It's been a real pleasure. Thank you for having me.
And finally this week, Being AI's $150,000 settlement with Clear Capital over alleged defamation shows how court rulings can be out of reach for many. Will Mace gives us the play-by-play.
In this week's Shoe Shine, Will Mace has taken on the tricky task of looking at defamation lawsuits. This comes off the back of Being AI's no-admission settlement with investment bank Clear Capital. So, Will, what happened there?
Well, Being AI came onto the NZX market through a reverse takeover, a backdoor listing earlier last year. Midway through the year, Clear Capital, sort of boutique investment bank in Wellington, wrote a bit of they sent a newsletter out they do regularly, and there was some comment in there from one of their analysts around, is Being AI really an AI company? I think there's, NBR's written a lot about this topic, and actually we did write an article off the back of that analyst note, repeating and commenting on, repeating that comment from the analyst.
Yeah.
And that ended up being subject of a legal case or a legal threat from Being AI to Clear Capital, and actually NBR received a threat which along similar lines because we repeated it, which we rejected. But they did go after Clear Capital in the end and took that to court. In the end, there was, as you say, a no-admission settlement, $150,000 that Clear Capital paid to Being AI. No admission.
Yeah, no admission.
That, there's that. But then immediately after, in the announcement that Being AI made, they said that the result completely sort of clearly vindicated their position.
Even though there was no admission.
Exactly.
Okay.
So, which is interesting, interesting when these cases have a settlement or no admission, and then people come out with these statements. We also spoke to Clear Capital afterwards, who gave a statement, talking about basically the cost of going to trial or trying to get a strikeout of this claim was going to be prohibitive. Basically, they weren't able to do it. So that's how it came about, and so that's kind of the jumping off point for this.
Okay. Interesting outcome there, but there's a broader issue here with defamation actions and their cost and their effect on media and commentators, isn't there?
Yeah, well, I think that, cost, as Clear Capital pointed out, is a huge factor in this. And, asymmetries in sort of the justice system and who has a lot of money and who doesn't, are nothing new. But they seem to be kind of ramping up in a way, and especially in these days when media companies have smaller balance sheets and less budget to go on these kind of things and carrying through big legal cases. The Being AI example, putting aside for a minute, let's just talk generally. There could be more perhaps cases brought in cases where the media are seen to be, picking on somebody or, creating a defamatory statement. It hasn't necessarily been tested in court, but a legal threat comes in and perhaps the media company backs down more so than it used to because it doesn't quite have the rivers of gold coming through to pay for legal
Those
action.
advertising rivers of gold are no longer there, are they?
Yeah.
All right. There's a final question here, and I need you to help me out with it. It's called a slap. You talk about a slap in shoe shine. What's a slap in this context?
I could give you one.
Yeah. Let's talk about it in defamation context and save that for later.
Yeah, obviously an acronym there stands for Strategic Litigation Against Public Participation. And basically what that is there are certain cases where it's quite obvious that a plaintiff is trying to frustrate or suppress information or frustrate a process or frustrate the defendant, the respondent in a civil case. And this is happening, it was pointed out to me by an academic that I spoke to who studies this intensely, say in the UK where a lot of Russian money is actually being used to tie up journalists and independent commentators in the courts basically in a boldly sort of frivolous or vexatious way. And the legislators there have seen fit to implement anti-slap laws. And same in Canada and in EU member states. And obviously in the US it's a thing as well. It has been for quite a while in various states. So it's a developing sort of area of law. And what it does is one of the things it does is it cuts down the cost to the respondent, to the defendant of fighting these, because it brings it sort of the substance of the case up front. So it's like a strikeout claim that you can have here in New Zealand. You can do that here in New Zealand, but it's still costly. If a defendant can sort of ask the court to consider this case as a slap case, then they can bring the substance of the case up to the front early on in the case, and then they won't have to go through with a full trial.
So it could be less costly,
definitely.
And therefore someone might be more inclined to defend against one of these defamation actions.
Yeah, that's basically it. Yeah.
All right. Well, Mace, thanks very much.
Thank you.
And thanks for joining us. Our news team is back from 5 a.m. tomorrow with the latest business news you can use on mbr.co.nz. And join Mike McRoberts from 5:30 p.m. tomorrow for a look at the day's top stories. See you then.